welcome back to the channel, guys. So today we are back with another video about the interest rates which are coming up on the USD in just 12 days. As you can see here, it's in fact it's remaining 11 days 23 hours. The day just changed a few minutes back, so it's 11 days remaining till the interest rates are decided if they are going to raise or not. So let's try to understand how this tool works. This is a Fed Watch tool from the CME group. This tries to explain to us what is the probability of rising the interest rates, easing the interest rates, or there is going to be just a no change. They will stick to the current rates that they are on. So far the basis points are 525 to 550. This is the current basis points. So if there is a chance of hiking the interest rates, they'll be hiking by 25 basis points, which will be from 550 to 575. But the chance of rising the interest rates, as you can see here, is 7%. And the chance of not rising, staying on the same basis points, is 93%. So here is the probability: rising the interest rates, keeping the interest rates the same, or decreasing the interest rates. There is a 0% chance that they will decrease, but a 93% chance that they will stick to the same interest rates as they are right now. So why are we making a video about this if it's a 93% chance? Let me explain. So we have certain economic news releases that will highly impact the decision of interest rates. So these are the GDP, the CPI, which is a measure of inflation, NFP, which is a measure of the labor market, and the GDP, which is the measure of the economy. So as we can speak right now, on 1st of September, as you can see here, the news, the release of the NFP, the labor markets, was released, which is released monthly, and you can see the report was pretty good. So it means the jobs are trying to be there. As you can see, the number of jobs that are created within the previous month. So this is the report, and it came out higher than expected. So this is good for the economy. Okay, let's see on the we are still waiting for a news on the inflation reports, which is CPI, and it's coming out on Wednesday 13th, which is next week. As you can see here, we are looking at consumer price index year on year, month on month, and core CPI. But as you can see here, we are looking at the forecast showing that there might be a rise in the inflation by 4 points year on year, and there might be a rise of 4 points also in month on month. Now if this comes out, and it comes out higher than expected, it means inflation has just made a change in the trend, and it has started going up again, which might change the decision of the Feds to increase the interest rates. Let's try and look at the history here. This is pretty, we need to really try to understand this to the details. As you can see here, CPI year on year, we have a report about that on every month. As you can see here, May, June, July, August, and it's a pretty good trend. See the inflation report on a year on year basis, it's coming down as they calculate every month. So it was from 5% in April, 4.943, and here it was lower than expected, which is 3.2. Now the previous year on year, which is 3.2, is expected to jump back again at 3.6. Now if the actual report comes out year on year and it is higher than 3.6, this and CPI month on month, if it comes out higher than 0.6, this might change the Fed's decision to hike the interest rates. Now, what does this mean for the Forex market? It means if they hike the interest rates, we have a high probability that we will get some really good setups in the news release. This is why we are making this video. So if they keep the interest rates the same, there is pretty no idea how you're going to determine where the market is going. It will be a normal market, but if they ease or hike, it will be easy to predict some high probability orders or high probability setups in the Forex markets. So we have to look at how the CPI is going to come out next week to really understand if the Feds are going to change their decision from 13th till the day they are going to release the the interest rates, which is going to be 20th, a week after the CPI is released. So as you can see here, the Federal Open Markets Committee statements and press conference and releases is exactly on the 20th, which is 12. So we are going to be waiting to see how this all plays out. Then we'll try to understand how the interest rates are going to impact the Forex market. So guys, keep a keen eye on the CPI report next week. Thanks for watching, guys, and keep it up.